Good morning. Some drama today, but nothing markets can't handle unless you're Elon Musk. It's Tuesday and this is the breakdown. The dollar this morning seemed impervious to Phoenix Capital's report that the US plans to print $7 trillion over the next 2 years. With futures still optimistic, yesterday was a dismal day for the Nasdaq, which lost another 2.5%. Red contagion spread to the Russell and S&P, with the Dow managing to eke out less than 0.1%. Still ahead today, the Red Book and house prices at 2 GMT, with Fed head Powell testifying an hour later. Europe was red all over on market close yesterday, led by Holland's AEX with almost a percent drop. This morning finds the euro struggling despite better than expected business expectations for February. We're up nearly 3 points to 94.2. And the pound is still contracting despite better than expected average earnings this morning for December. Unemployment, though, was up 0.1 to 5.1%. Cable is still comfortably above the moving average, and that evening star up top seems to have been broken by the bullish candle that's developing right now. Also, the RSI seems optimistic, but volumes are still low, so we need to wait and see. Later today, Italian industrial figures at 9, followed by the Eurozone's consumer inflation at 10. What these do for equities is anybody's guess. The question is, can Asian data lift us out of the doldrums? Well, if Chinese indices are the lifebuoy, dream on. They're down this morning by fractions, but the Hang Seng is up 1% and the Nikkei nearly 0.5%. That's after South Korean's consumer confidence added 2 points to 97.4 in February, and house prices in China added a tick to 3.9%. The oil world today mourns the passing of Sheikh Ahmed Yazaki Yamani, the former Saudi Arabian energy minister who died yesterday aged 90. He's the one on the right with Kissinger. In 1973, Yemeni spearheaded the Gulf nation's oil supply halt to the US and other countries, causing what we now call the oil crisis. Later, he oversaw the nationalization of Aramco. WTI continues spouting this morning. It's up to 62.49. Gold is still in its week-long cup and handle, and Bitcoin is down 10% to just above the 50K mark after Janet Yellen yesterday described it as inefficient and speculative. The latest drop was a result of margin calls pushing the asset down nearly 20% throughout the session. As you can see, the drop is meeting support at the moment at 49.5. If it breaks below, we can see our next target at 47,800. Perhaps the biggest loser here is Elon Musk, who reportedly lost about $15 billion in a single day. Well, when you're dealing in a speculator's currency, you've got to be ready to pay the speculator's price. In corporate news, Johnson & Johnson has reportedly set aside nearly $4 billion for upcoming litigation related to alleged asbestos-laced talc products. I guess that explains the itch. Women in the U.S. are blaming the company for their ovarian cancer, and the case is now going to the Supreme Court. Spotify is expecting a 1 billion user influx in users this year as it signs distribution deals with DC Comics and Warner. HSBC announced a 10% drop in revenues to $50.4 billion, beating expectations. Tesla shares yesterday dropped 4% after the company removed their Model Y from inventories. And Reuters reports that Lucid Motors, that's Tesla's upcoming rival, will be going public soon with an estimated market value of $11 billion. Still ahead, we're expecting earnings from Berkshire Hathaway, Macy's, Home Depot, Intuit, and Thomson's Reuters. Interestingly, we're seeing a retail reversal between bricks and mortars like Macy's that's going green now that vaccines are opening up lockdowns, and Home Depot down after an excellent pandemic performance. We'll see you again tomorrow.